All right. Hello, everybody. Welcome back to another episode of the Market Close. We are live. Got a lot of stuff to talk about. We will be discussing Micron earnings, which will be happening after the bell. That is the biggest earnings of the day. So we will be talking about that. I think that's the only company that actually has earnings. So we'll be getting into that once we have the closing bell. Obviously, a bit of an ugly day, to say the least. The AI trade continues to be exhausted, and that is the first headline that we're going to get into. It is the emergence of this Blue Owl Oracle, essentially, I guess you could call it fallout. Maybe that's too intense of a word to say, but that was the headline that broke this morning. It affected Oracle. It was down about 3-4%, and actually it was down about like 1-2%. Now, as we get towards the end of the day, Oracle is down a lot more. NVIDIA down about 3%. Oracle right there down 6% on the day. I think this is close to the lows of the day. Yeah, pretty much 177. Broadcom absolutely demolished right here. 326 down about 4.3%. Broadcom did get to 322 at one point. Grabs down 1.5%. S&P 500. Wow, I didn't even see that. Down about 1% of the day. So there you go. S&P 672 officially down 1% of the day. Google below 300. Oracle again 177. SMCI down 5. Bitcoin, we all saw it go from 86 to 90 like in 2 minutes. And then it went from 90 to 86 20 minutes later. So even Bitcoin has been on an absolute roller coaster all day. RIVN's down 1%. Lemonade's down 3%. RIVN's down 7%. D-Wave, all the quantum names that were up in the morning, they are down 6 to 7%. Cypher's down 3%. VG and NextDecade up a little bit green. Palantir's down 5%. AMD's down 5%. Amcor's down 3%. S&P again down 1%. It's been an ugly day. It's been an ugly day. So we got a lot to talk about. We'll get into everything going on. And it kind of sucks that Micron has to report on a day like this. Let me know if you own Micron or not. Micron right here down about 2.5% of the day. Again, absolutely incredible company, up 150% year to date. Probably trading at a much more reasonable multiple than Broadcom going to earnings. But nonetheless, this is a little bit of a tough day for them to report. So we're going to see what they end up saying once we get Micron earnings within 15 minutes. Okay, one thing I did on my portfolio today, basically the same thing I talked about in the morning. I took the hedge. I took the hedge on Hood. So I'll explain it more in depth towards the end of the show. I spent like a good 20 minutes in the morning talking about this. In fact, I don't know if Jason was taking the hedge either, but Jason tweeted like an hour ago that he did the same on more than just Hood, some of the other stocks in his portfolio. But I took the hedge. So I sold the in-the-money call $100 strike for Hood, January 2027, collected about $42 of premium, which means now the portion of my Hood position that I sold the call on is protected up till $80. So again, quick rundown. Don't want to spend too much time on this. We'll talk about it more later. I didn't have to sell the shares and take the tax liability. If there's a 50% drawdown on Hood from 120 to 80, essentially I'm protected. And literally, I saw it happen today. It's quite incredible what happens when you go delta neutral. My Hood position was down XYZ thousands of dollars. My Hood covered calls on the deep in the money covered calls were up almost exactly the same XYZ thousands of dollars. So it's almost like it worked perfectly as a hedge, and the math ends up making sense. And so I'm already feeling like I can sleep better, and I just knowing that the most volatile part of my portfolio, which comprises a significant percentage of it now could fall to $80 and I would be covered. So if it falls below 80, that's when you see more downside, but hopefully that does not happen going into next year. And then effectively I'm agreeing to sell these shares at 142. And honestly, I'm okay with selling some of those shares at 142, given I bought them all the way from $8 up to $70. So that's what I did on my portfolio. Now, the reason my portfolio is still feeling some pain today is because I did not hedge any of my NVIDIA position or my Palantir position. And again, those three make up the majority of my portfolio. So that's a decision I got to make going into the end of the year. And, we'll see what we end up doing. I kind of like having NVIDIA unhedged because let's say we do go super bullish and Hood rides up. So will NVIDIA probably at that point. And that's where I can get a lot more alpha in the portfolio. But at least on the most volatile part of my portfolio, has to deal with crypto and anything, headlines, prediction markets, or any random thing that pops up, that is now comfortably hedged, which feels a little bit better to me. But regardless, still an ugly day for my portfolio, as a majority of us are feeling the pain of it throughout the entire day. SMCI down 5%. Nebius tried to make a little recovery back above 80. This one got smacked right back down 6%. And this is because of Oracle. So what is happening because of Oracle, or what is happening to the data center plays? The answer is Oracle. And the analysis on this goes back down to Blue Owls. So Blue Owl is a private credit lender. This morning, the headline was, we got some Venezuela headlines as well that might be also freaking out the markets, but I think realistically, it has to do with this. Blue Owl came out and today said, we're not going to be taking one of Oracle's $10 billion data center deals. And that really freaked out the market. Why did that freak out the market? Because the market's like, wait a second, Blue Owl is taking everybody's deal. In fact, Blue Owl is taking Meta's data center deals, and they're on the hook for the debt, aka Meta could walk away from the deal and Blue Owl would be left holding the bag. That's how confident Blue Owl is in Meta or in like the data center thesis. And hell, aren't they taking Oracle's deal? Like what's going on here? Why are they so afraid of Oracle? And that brings up a deeper question around the state of the data center trade. So let's get a little bit of coverage on that, and we'll talk more about why that's implicating the rest of the AI stocks today.
Weeks at least. Seema Modi's here with the very latest. So what do we know at this hour? What are you hearing?
Scott, been speaking to a number of different people, and the important context here is Oracle is in the midst of this ambitious data center rollout, right? It has that $15 billion project in New Mexico, $18 billion project in Texas, and then there's this $10 billion Michigan data center that we have been discussing today following that report from the FT that the financial firm Blue Owl is pulling out as a backer. Now, a source familiar involved in looking at this deal tells me that Blue Owl did conduct due diligence around this deal, but found that the economic terms tied to this specific deal were unfavorable compared to the other two that they're involved in with Oracle. And so they decided not to move forward. Now, Oracle has gone on records telling us earlier today that they have found an equity partner, that the schedule is on track, no change in plans. But I think what is significant, Scott, is to see how the stock is reacting. It's still down about 4 to 5% on the day. This specific story, I think, is raising a couple of questions, right? If it's not Blue Owl, who's the equity partner that is involved in financing this Michigan data center? How much more debt does the company need to take on? What is the timeline? And how does Oracle orchestrate a bond deal without seeing its credit rating drop into junk? It's right on the edge right now at BBB. Worth noting that the latest comments from Moody's yesterday suggested that they're assessing all the risks around Oracle, but they're keeping their rating where it's at investment.
So Blue Owl looked at Oracle's financials and was like, we don't want this deal. And I have not gone that deep into Oracle's financials. But even today, I was like, well, let me look at the financials and see if I was the underwriter at Blue Owl that was tasked with taking this deal or not, what I wanted. And here's what I found. Oracle has $127 billion in debt. $25 billion of that debt is due within the next 3 years. This year, Oracle generated $13 billion in cash flow, but with all their debt, they aren't expected to get to positive free cash flow until 2028, and they're going to do negative $20 billion free cash flow in fiscal year 2027, which is why their credit default swaps are up 200% in the past couple of months. So this company has to pay back $25 billion of debt within 3 years. They have $127 billion in debt, and they're going to be negative free cash flow next year, and they're not going to get to positive free cash flow until 2028 at the latest. So if I'm Blue Owl, I'm looking at this and I'm saying, look, I already am deep in the data center trade with Meta, with Google, with all these other companies. And Meta and Google probably are a little bit more trustworthy than Oracle. Not to say Oracle is a bad company or anything. It's just at the end of the day, it's Meta and Google versus Oracle. And so you're probably going to take that bet. So how does Oracle get out of this situation? Very simple. They have something called RPO, remaining performance obligations. They have $523 billion of that. $300 billion out of the $523 billion is from none other than OpenAI, which couldn't even get Amazon to pump today after they made that partnership last night. And the market's like, well, we don't think you're going to get that $300 billion from OpenAI. I mean that's at least how I'm interpreting the market's reaction to this, which is why Oracle's down 6%. So you've got a world in which that headline, along with the Oracle OpenAI headline on Friday, you put those two together, and what you get is just a fundamental level of exhaustion that I think the market is having around the concept of data centers and the concept of AI. S&P now lows of the day at 671.40. What does that mean for the end of the year? I don't know, because if that sentiment doesn't turn around in the next, what do we got, 12 days, then yeah, I mean, it's not going to be a year where Santa visits town. Could that sentiment change overnight? Sure. We've seen that happen many times. But this is now almost 2 weeks in a row of some headline cascading on even more headlines, which ends up leading to the market just being frustrated. I mean, Broadcom down again today, Oracle down again today, and then all the data centers, neoclouds getting hit, Google losing 300. This stuff is starting to feel more so like the market really needs to consolidate these gains. Now, then again, I say that with humility, because we could flip V-shape tomorrow for whatever positive headline that comes out about NVIDIA or anything like that. But as of today, that's not happening. And that's why you're seeing some of the pain in NVIDIA right there, down about 3% on the day. We got 4 minutes until Micron earnings. We'll talk a lot more about what's going on in this market. Let's bring someone onto the show to help us get through what's going on with Micron. Sam, what's up?
What is down? What is that? Everything is down right now. Everything is down. And I don't know, man. Micron's got to save the day. I don't know what kind of positive commentary they're going to make after being a double in the last few months. We'll see. We'll see.
Pump or dump? What are you thinking? I'm putting the poll in the chat on Micron.
Dump. Dump. Yeah.
All right. I got to go pump then. I got to go the opposite of you. I got to get some bullishness here. Is it dump because you think there's an issue with HBM, or you think it's just the stock's run up too much?
I don't think there's an issue with HBM, but I think every single other stock in the semiconductor space has been telling you that we need to cool off this trade a little bit. I mean, Micron's up like over 100% year to date, or I think like 80% year to date. So actually more than that. I don't think even a 10 or 15% drop is going to really matter that much to the stock, but I think that is going to.
And also just increase your mic a little bit, increase the gain, or just move it closer to you. Just a little bit.
How about now?
That should be better. Yeah, go ahead.
Okay. Actually, I'm going to fix this. Yeah, no, I think that actually Neil, Couch Investor, he's been in this one since like the low hundreds, right?
Yep.
I don't think he cares if it's going up or down or not. Like HBM is not going anywhere. People who've been earlier investors in Micron and earlier this year are sitting at basically a triple of where it is today, especially early investors in SK Hynix and Samsung abroad. Does it really matter what happens to this report? Maybe not so much, but I think that even just a little bit of a breather could be like a 5 or 10% down from here. I'm actually short Micron right now. I have some shares in the inverse ETF.
Okay, and so I think that's a sort of a momentum play for you going into these earnings.
Well, it's a bit of a hedge because like I'm very tech weighted in my portfolio, so I kind of have to hedge if I want to protect the capital. This last week has not been fun for me. I mean, Amcor's down almost 15% from its recent highs. On Semiconductors holding a bit. Hood is just, Hood is actually trading higher than where it was when we had that reversed low a few weeks ago in November. Yeah. So, but it had its greatest. This actually happened before where they had like an amazing event and then it just sold off all of its gains the next day. So like, there's nothing wrong with the Hood fundamentals. Like the company is obviously a great company. Blasting up.
It's just the macro environment.
Yeah, it's terrible, man. The market hates tech right now. It hates tech.
All right, we got 30 minutes until the market closes. Sam and I after Micron. I think Steve will also hop on in about 30 minutes. We'll talk all about kind of market sentiment, environment, this Blue Owl Oracle stuff, the state of the AI trade. But let's get through Micron. Let's see what happens here. I'm rooting for the best. I don't own this stock. I hope it does well for a lot of people. In the chat, I think we are more pump than dump. Let's see. In the chat, we are 65% dump. All right. Here we go. We are going to see as we get into the close. And did I say 30 minutes? Sorry, I meant 30 seconds. It's been a long day. Although my crown and my root canal went great. Got to see the dentist again. Got to smile at her, this thing. And we got a nice little crown.
Dentist.
The
dentist.
It was a good day. Portfolio lost a lot of money, but I got to see the dentist, so it was a good day. All right, Wednesday, December 17th, 4 p.m. The stock market is now closed. All right, there you go. We got through the day, December 17th. Let's see what we got. S&P 500 down 1% on the day. These are the lowest levels on the S&P since when? Is it really since November 25th? I think it is since November 25th. Yeah, November 25th, right before Thanksgiving. These are the lowest levels in about 3 weeks now on the S&P 500 as today's December 17th. Micron right there. We'll get those earnings after the bell. That was down 3%. Robinhood was down 3%. S&P 500 was down 1%. Oracle was down 5.4%. SoFi was down 5%. NVIDIA, they took her down 3.82%, almost closed below 169. Tesla lost everything. It's kind of crazy if Tesla topped out 2 years in a row on the same day, which if it actually did top out today at 495. By the way, SoFi is not up 5%, guys. That's just a glitch probably on your brokerage, but it's not up 5%. then that would be crazy 2 years in a row if that were to happen. But we're going to see towards the end of the year if that ends up playing out. But Tesla was down, Google was down, NVIDIA was down, Oracle was down, Bitcoin 85,000. And then you had Home Depot as well. That was relatively flat on the day. Amcor was down 3.5%. Then Nebius down 6.7%. Micron is up. Micron is up. Okay, let's see these results. That was quick. 5.5% on Micron. Street wanted 396 of EPS and 12.8 billion of revenue. Street got, wow, 478 of EPS. That's a 21% beat. And 13.6 billion of revenue. That's a 6% beat on revenue. 21% EPS beat for a memory company. I mean, I don't think Micron's beaten by that level in the past couple of quarters, or maybe they have, but the fact that if they have in the past couple of quarters and they're continuing that is just incredible growth. It's way ahead of the expectations. Revenue is up 57% year over year. EPS is up 167% year over year. Those that voted for pump so far, you are right. Somehow the dumps went from 65 to 60. Somehow this always happens. It always happens. Somehow when the stock goes up, the dump percentage goes lower. 6% on the day, 240 on Micron. Micron's helping the rest of the market. S&P's up after hours. SoFi's up. Hood is up. Broadcom's up. Look at Mr. Micron literally helping every other stock. Let's see if we can get some coverage on this, but I mean, not a horrible quarter on that top and bottom line beat. We'll see if we can get guidance in a second. And if that also could give us some momentum. Now, we'll also see, I mean, this is a 6% candle to me is more trustworthy than like 2 or 3%. But it also, you know, could easily reverse if there's any bad thing that they say on the call as well. Okay, Micron sees second quarter adjusted gross margin 67 to 69%. Wow. Street was estimating 55 on that. That is a 14% beat on margins, which is massive because that ultimately comes back down to EPS. Micron sees second quarter adjusted EPS 822 to 860. The Street thought it would be 471. That's basically a doubling on EPS, and that's guidance going into the second quarter. I'll see if I can get some more updates on their website, but I mean, from a guidance perspective, my goodness, that was not bad. That was not bad. Okay, for everyone saying Sam is crying, Sam probably lost $1,000, so it's not this.
Okay, so I have a very tech-heavy portfolio, and it's a hedge.
It's a hedge. It's supposed to go to zero.
Hedges are small. Hedges are small positions. But I'm sorry, I don't trust this pump. I will say, I hope it stays because the whole market's up, but like I don't trust this pump.
The point of a hedge is it's supposed to go to zero.
Yeah, I mean,
you're not supposed to make money on the hedge, and it is what it is. Like, this is why timing is hard. This is, you know.
I'm pretty sure these guys have messed with me too, but like it, you know, it is what it is. But hey, if it comes back, that means the rest of the market comes back. I'd love to see that.
4.5%. Okay, so I do agree with Tanner in the chat that the market should be more excited about this. Yeah, I kind of agree. So there is a world in which this pump might not really have legs, but these numbers are good, bro. These are good freaking numbers. Trump, by the way, speaking at 9 p.m. On what Trump says. Let me see if I can get some coverage right here on Micron, and then we'll go deeper on their website once they upload the presentation on their numbers.
Yeah, and just like the headline on the press release, AI demand acceleration, along with other things, but they talk about it, you know, driving record fiscal first quarter results, including highest ever free cash flow. Again, shares of Micron bouncing around, but mostly higher. The stock right now up about 4.5% here in the aftermarket. What?
And we were talking, I mean, you mentioned the fact that, you know, this is a stock that basically has almost tripled on a year-to-date basis, could potentially triple. But I was looking at some of the biggest winners on a year-to-date basis in the S&P 500. If you had ran this chart, the function on your terminal a few months ago, all the names would have been the bigger chip makers, the NVIDIAs, the Broadcoms of the world. At the top of that list now, it's a SanDisk, it's a Western Digital, it's a Seagate, it's a Micron.
It's a lot of those derivative plays that are leading to make these chips even useful for AI.
Actually, Christina Partsinevelos has the numbers. Christina. Yeah, that's because there's a substantial beat across the board for this memory maker, starting with EPS in the quarter for Q1, $4.78, higher than the street anticipated on revenues of $13.64 billion. So very strong beat there for Q1. In regards to Q1 non-GAAP gross margins, which is a big concern for a lot of these chip names, 56%. The street was anticipating 52%, so stronger there. For Q2 guidance, the company saying in their statement, our Q2 outlook reflects substantial records across revenue, gross margins, EPS, and free cash flow, and we anticipate our business performance to continue strengthening in fiscal 2026. And here are those numbers. Q2 EPS guide of $8.42. Yes, I have to say, double check this, $8.42. The street was anticipating $4.07.
Guys, that's crazy. Like, forget the stock. That is crazy. And that should be an indication for a lot of the other chip makers that demand is going really well. I mean, this could be Micron specific, but $8.60 versus $4 expected. I don't think we've seen a beat like that on guidance from any of the AI companies, quite frankly, outside of NVIDIA this entire earnings cycle.
78 cents on Q2 revenue guide of $18.7 billion, also higher than the street. Non-GAAP gross margins going up substantially to 68%. The company is guiding 68% versus the 54% the street was anticipating. And so that is why you are seeing the stock pop. Keep in mind, there has been quite a run up in this company just over the year to date, up 165% into this print. So perhaps some was priced in, but nonetheless, quite a reaction. Guys?
Yeah, up 6.5 now. Christina, thank you.
Okay, Sam, you've had about 8 minutes to internalize this stuff. What are you thinking about these earnings?
Well, okay, so what is high bandwidth memory? Micron produces high bandwidth memory along with SK Hynix and Samsung. So a lot of the demand is really pulled forward based upon how many chips that NVIDIA is willing to make or how many chips AMD is willing to make. All these ASIC chips, they all use high bandwidth memory. So Micron is a beneficiary of all of that. But one thing we got to remember too is that Micron is a very cyclical business because they can adjust how much you're going to produce and all their inventory very quickly. And it very much is reliant on demand. I don't think the demand's going to go anywhere. I think demand is still very high. My only thing is that from a perspective of how the company has been performing lately, in order for the material to move up, it needed to provide really good earnings. And it looks like it did. It provided really good earnings, which is the reason why it's still up. But the thing is that when you're thinking about like data centers, right, the cycle for data centers is much longer. It's like 3-4 years and probably even longer than that for a lot of these chips. And also these companies, they need to have like the latest and greatest every single year. So the new model comes out, they could have the latest models of chips there, which means that Micron is going to continue to be much more in demand. I think from the perspective of the earnings are really good. I mean, obviously like nearly doubling the amount of EPS on there. The company was trading at like a very cheap valuation when it was like below $100 a few months ago. Then now it's over here. It's good. Actually, you're seeing Micron is up too. Micron is up. SanDisk is also up as well.
NVIDIA's up.
Yeah, NVIDIA is up. Well, I mean, the Qs are up like 33 basis points. So.
Dude, SanDisk up 4%.
I know. It's like, did SanDisk report earnings? I don't know.
Did Micron save? I mean, hold on. The Qs are up 20% of what they lost today because of Micron. Unless there's another reason I'm missing. Amkor is up, Broadcom's up, Nebius is up. Or, I mean, this is the market we're in, right? One thing can change everything. And I guess today, at least, it's Micron. Micron up almost 7% right now. Do you think the beating of... So I think same thing with Broadcom. Although Micron was trading at a much better multiple than Broadcom, they needed to have a perfect quarter. Do you think this qualifies as perfect, or is there something still that you're thinking is iffy?
I don't know. I to be honest, when it comes to Micron, you only got 3 major players in here, but data center revenue is what you want to really see grow here, and they are exiting their consumer segment, which really didn't do much for them compared to their data center growth. Did they provide guidance for next quarter? I haven't looked too much into the earnings, but I do know that they report some stuff in the earnings call. So we will wait for the earnings call.
Yeah. And again, same thing with Broadcom, right? There's probably some specific questions. Now, granted, Micron's probably not tied to OpenAI, so hopefully they don't have to say anything that pisses off the street. But gross margins are up 10% quarter over quarter, 66 versus 59. Data center, and that's in cloud memory. Data center, that's up sorry, gross margins in cloud is up 7%. Data center gross margins are up 10%. Mobile and client, it's up almost 20%, 36 to 54. And then automotive and embedded, 31 to 45. I mean, I think that's the story for Micron. The story for Micron is their margins have improved sequentially. Yeah, I mean, this is the first thing the CEO says. In fiscal Q1, Micron delivered record revenue and significant margin expansion at the company level and also in each of our business units. Our Q2 outlook reflects substantial records across revenue, gross margin, EPS, free cash flow, and we anticipate our business performance to continue strengthening throughout fiscal year 2026. Micron's technology leadership, differentiated product portfolio, strong operational execution position us as an essential AI enabler, and we are investing to support our customers' growing needs for memory and storage. I mean, dare I say this is the best chip quarter outside of NVIDIA that I've seen so far. Because at the end of the day, the street is worried about, is the growth sustainable? Micron checked that off. The street is worried about, especially with these hardware companies, can they actually increase margins to the point where we see multiple expansion? Micron definitely did that with a almost 100% increase in overall margins for Q2. And then the third thing the street is worried about is simply, can these companies that have already run up as much as they run up, like in NVIDIA, which unfortunately NVIDIA didn't get the benefit of the doubt after the earnings, but can they beat and raise? Micron beat and raised. They beat by 20% and they raised by 100%. So, I mean, regardless of what happens to the stock, this is absolutely an exceptional performance. Hopefully gives a little bit of less remorse to some of the arguments around AI bubble, just given how well they're expanding their margins. And if other AI companies can do somewhat of the same, even 10% of what Micron's doing on margin expansion, that should be more beneficial for the overall AI trade.
Yeah, the good part is that they don't invest in OpenAI. OpenAI isn't, or at least right now, they're not building chips, so they don't need to worry about being wholly reliant on OpenAI revenue. They're getting their money from the fabless designers, all right? So that's where they're getting money from. As long as they're continuing to pay NVIDIA, AMD, no one's worried about their debt, right? So as long as they're continuing to pay, Oracle hasn't made their A6 yet, so you know it's not as risky when you think about who's actually paying them. It's tough to say like what they could say in the earnings call to reverse all this, because the thing is that like the Oracle earnings call, the Broadcom earnings call, it was the OpenAI concentration is really what kind of took those down. We don't really need to worry about that with Micron. We just need to see what the market feels about whatever they're going to say.
Agreed. Okay, that's what we got with Mr. Micron. Steve should be on in about 15, 20 minutes, so we'll get his thoughts on what happened with the overall market, so we can transition into talking a little bit more about the broader macro. By the way, Medline, did anyone buy this thing? Largest IPO of the year, raised $5.3 billion, up 40% on the day. It's down a little bit after hours, but I mean, looks like a successful IPO that we had here.
You ever seen that meme or that GIF of like the guy like pretending he's jumping off a balcony or like drinking the like I should have bleach.
No, but this is what like a couple grand at most you're losing on this hedge.
No, I only got like a small hedge, and it's in shares too. So and it's a 1x inverse. So
it's a grand or more, like a grand to $2,000 is your pain here.
Well, the size of the position was like a grand or two, right?
Okay,
and
so
it's in shares. It's a 1%. It's a 1x inverse Micron.
You need to stop saying you've hedged with $1,000 position, because first of all, that's not a hedge unless it goes 10x, and Micron would have to dump a lot.
Well, I didn't want to.
You got everyone making fun of you, but you lost $1,000. Like that's not even.
I think it was 1,000.
Yeah, you lost $300 on your $1,000 position. If the size of your hedge is $1,000, I'm sorry, that's not a hedge. Like that's just it's a gamble. You did an earnings gamble. You didn't do unless Micron were to tank by like 40%, and then. But outside
there's no NFL game today, so I have to do something.
Well, there you go. Yeah. So for everyone making fun of Sam in the chat, it's not that serious. It was more of an earnings gamble than anything. That's what we tell our wife.
Yeah, I told you guys what I'm going to tell my wife later. I didn't tell you the real story. I got a $200,000 short position on Micron right now.
Yeah, look, first of all, Sam, I know you. You don't even do things that are that risky. So the most you could possibly do, even if it went to zero, you lose $1,000. It's like, all right, whatever. Like you lose $1,000.
I'm the guy who had a 3% position in Nebius when I was at $20. You really think I'm going to open up a massive Micron short position? Like, come on.
Yeah, it is what it is. It happens. I mean, I would rather just admit it's an earnings gamble, because then if you lose it, you lose it. Who cares? But I don't know if it's necessarily hedging your portfolio, unless Micron were to collapse, which, I mean, with those earnings, I don't know if that's easily collapsing. We're not watching Coinbase at 5, guys. I'm not watching the Coinbase event. I hope it goes well, but yeah, we're not going to be watching them introduce prediction markets. Okay. Sam, what the hell's going on with the markets? What are your thoughts? Is Santa coming to town? How are you feeling?
I think this whole thing with the debt issue, I was watching your stream yesterday. Like, did Sam Altman really top the market after the interview? And it was around the time when you said that. You know, it is very much a turnoff when someone says that thing. Like, they're so good. December calendar.
Doesn't help when they post
honestly,
that.
it sucks that a lot of stuff has been down a lot. Nebius, a lot of the data center stocks, NVIDIA had like the best quarter. I mean, who would have come into this quarter thinking that Micron was going to post the crappiest earnings ever when you had NVIDIA beat it, right? But the thing is, like, the market just doesn't like this data center stuff right now. It doesn't believe a lot of the narrative. And then you saw the Blue Owl argument with Oracle this morning. I don't know. I don't know if Oracle's a buyer. I'm not buying Oracle, but you know, I was surprised to see Broadcom down like $100 in like the last week. I'm very surprised to see that happening. But at this point, like, you can't even, whatever fundamentals that are attached to any stocks that you own right now, like, the market doesn't care about it right now, right?
Well,
Because if that was the case,
why is the market ignoring all the fundamentals, in your opinion?
because I think the thing is that when you have fear in place, especially toward the end of the year, when people are basically booking the gains for the rest of the year, a lot of these fund managers are not trying to chase it into the end of the year when they see the market go down. You also have financials going up. You also have healthcare going up. So XLF was at an all-time high, right? In the last couple of days.
Yeah.
And
financial.
the money generally chases these sectors that are moving pretty well. I mean, if you look at energy today, energy was up. All right. Utilities is actually down, surprisingly. I don't think this is a broad market sell-off. I think tech is just underperforming. XLK is down 2% today. Right. So this is not a broad market sell-off. This is a rotation. And it's a rotation, unfortunately, out of tech.
Okay, so do you think the rotation out of tech, which is pretty obvious, and the reasons why it's happening is because the shakeup on the data center trade, do you think this means the AI trade is in due for a breather, or do you think the rotation is being done in a tactical manner, but eventually that money is just going to find its way back into NVIDIA, Google, etc.?
The rotation never stays in where it's going to be at for the long term. Maybe temporarily, like you saw China was outperforming the US in the beginning of the year, and you saw all these emerging markets and non-US stocks, and everyone's like, the US, what's it called? Exceptionalism is finally done after like 10 years of not being exceptional. And the money rotated back into the US. Like, this isn't going to last forever, right? Tech is the driver of the US stock market, and I would argue the global stock market as well. Like, if you really want to reap the biggest gains in the market, you have to be invested in tech. Because if you buy the S&P 500, guess what? 40% you're in tech. If you want to buy pretty much any other index that's out there, it's mostly in tech. Everything is somehow revolved around tech. So if you really want to outperform the market from a long-term scale, you have to own tech.
Yeah, I would agree. I think this is just like my intuition from how I've been seeing people talk about it and a lot of these headlines, and also the data that I'm using to potentially come to this conclusion is that the Oracle OpenAI headline on Friday, not even a real headline that should shake up the market's down because of just like so much fear. Then the headline today from Blue Owl and Oracle, market's down again, even though theoretically it shouldn't be a big deal given Blackstone and other private equity firm is potentially stepping in to deal with the debt. So at this point, the market is saying two things. Number one, we don't fully believe that there is an ROI in all these data centers. We think there is value to it, and we think it could be transformational and change the world. But in the short term, we don't believe there's going to be an ROI. Number two, we hate the amount of debt that is being plugged into the system in order to finance this. And the opinion that I think most of us have is there will be an ROI to AI on the data centers. And most of us, I think, tend to believe that. And then number two is that, yeah, the debt is not amazing to see, but at the end of the day, the risk to reward based on issuing debt today at maybe 3, 4, 5% and being able to grow earnings at maybe 30, 40% means that there is a delta between the risk and reward. And therefore companies should be engaging in that type of financing. So the question then becomes, what happens to the stock market? And I feel like what happens to the stock market in the short term is, once again, it chills out. It takes that breather. Like the fact that NVIDIA is now trading below 24 times earnings next year. I mean, if the market's waiting for a cheap multiple in this day and age, that's as cheap as it's going to get. Now, maybe it obviously gets cheaper, but the point is the market can't be afraid of NVIDIA's multiple. This is not like Cisco in 1999 where the market's like, can you believe this thing is trading at 160 times EBITDA? Like, no, that's not what's happening here. Some stocks will have those multiples, but not the most important companies in the world. Not Microsoft at 30 times, not Google at 29 times, not NVIDIA at less than 24, not Meta at 18 times. So I guess the question is, does this breather last in a substantial way? And does this breather have broader implications for the overall AI trade? What is kind of your outlook into the early parts of 2026? And do you think there's other macro external effects like government shutdown or Trump Venezuela news that could hurt this even more?
So, well, before I talk about that one, I just want to address a question that someone asked about SK Hynix trading at a forward PE of six. Well, I mean, that's an international stock, right? So anything in the U.S. or anything traded in the U.S. is going to have that premium no matter what. SK Hynix is not a U.S. company. Micron is. It's going to have that premium no matter what. That usually happens with almost all the stocks out there. You had like Grab, for example, versus Uber, okay? It's going to have that premium almost all the time. So one thing that was actually really interesting that I could think like, okay, maybe this is part of the reason why the market is pulling back from a fiscal perspective, or sorry, monetary perspective, is that Japan, the Bank of Japan hiked rates for the first time in a long time the other day. Actually, no, I think they hiked rates, but the market didn't expect
they're gonna do it
them
on
to hike
Friday.
rates. Yeah, oh yeah, okay. So they didn't expect them to hike rates, but now they're going to hike rates, right?
Yeah.
And that's like the thing where it's like the market's like, hold on, because Japan usually front runs the entire hiking cycle, and even though we got the SEP, Summary of Economic Projections from the Fed the other day saying that they're going to keep cutting. If the market catches a hint that they might start a hiking cycle, it's going to freak out. I don't think they're going to start a hiking cycle. I think the bull market's got a lot of legs to go, in my opinion. But I think that just, that reversal in sentiment, it's like, oh, now we got to worry instead of being balls to the wall bullish. I think that's what's kind of putting the market at a halt right now. Also, like, the market's not really down that much. The Q's,
that's a good point.
The market's up, but the problem is that it's trading below all of the moving averages, EMAs, and the short term just is not looking good right now. So I would wait to aggressively buy dips right now because it can continue going down more. For me, I'm not buying anything right now. I would rather buy when we're in a massively short-term bullish trend. Until then, like, I'm going to wait. I'm going to wait until maybe we get a correction, or I'm going to wait until some stocks are down further, because relatively speaking, yes, we are cheaper. Like, Nebius is down half of where it was a couple of months ago, but it's also 3 times higher than where it was a couple months before that. Like, I would wait. I'm waiting personally to buy the dip hand over fist, and just like let the market speak for a minute. Let it unravel.
Yeah. Also, a lot of us already bought the dip in November when this thing was almost falling off the chart. It was at like 4 on Extreme Fear, and a hell of a lot of us bought the dip in April. So, I mean, again, when it comes to buying the dip, it's like, yes, on your favorite name, like Grab today. I bought 5,000 shares this morning at $4.90. I haven't bought Grab below $5 in like literally 6 months. Last time I did it was June. I said today was enough. I can't get the bottom for this stock if my life depended on it, because then it went to 487. But the point is, on my favorite names, I'm going to DCA on those. But when it comes to the idea of just incessantly buying the dip, retail's done that all year, and you've probably been rewarded for it. So I don't think there needs to be this like unbelievable rush of like, I have to buy the dip. It's like, well, if you're doing it in December, that means you probably didn't buy the dip throughout the entire year, right? And so it's like, I don't think there needs to be that desire to do that. But I agree with you that if the trade is exhausted, then that means markets are going to chill out. Now, the pushback here is that if markets rotate into other sectors that aren't really that attractive from a growth perspective, like healthcare and financials, even though they have other things that are attractive for them, eventually when NVIDIA puts up the earnings, or a Micron puts up the earnings that it put up today, or a Broadcom once again continues to crush when it's trading at a much lower multiple in 90 days, like that money has to find somewhere to compound. And it's either gold or silver or Bitcoin or companies with free cash flows that are going up and going up aggressively and increasing guidance by 100%. So I agree. I think the money eventually comes back to the trade. The question is, how long does it need to take a breather for before that happens?
Yeah, that timing really matters on the short term. And I didn't buy the dip aggressively in November. And I'm not really upset about it. You know, I mean, I played the short term on it with some trading and some call options, and I did pretty well since then. And even like on Semiconductor was actually up a good amount, and on Semiconductor is actually performing pretty well. But like, I wouldn't be surprised if this thing is like back in the low 50s, only because just looking at the sentiment of like the leaders in the market right now, the one that has led the way up, like Zeta's pulled back quite a good amount, and I'm about to go red in that position. Amcor is pulling back quite a good amount. You know, it's like sometimes like you're not going to catch the bottom in a lot of these stocks, but like it's just, look, when it comes to portfolio management and risk management, like decide your position size. I never understand why Grab is just always getting sold off relentlessly. Like it doesn't make sense to me, but I'll continue to hold Grab. Like the business is, I don't, Stock Talk was just saying this morning or this afternoon, like, oh, because it's a great business. Well, like I actually do believe that Grab is a great business, but I also have my position built out for Grab already. So I'm not going to,
you bought this thing at like 350. You bought it a long time
yeah.
ago.
So I bought it 350. I've added here and there, but I haven't like added aggressively other than maybe playing some short-term calls and stuff. But like, I don't know, man. It just seems like such an obvious play for Southeast Asia, especially with the expansion of smartphones, AI, autonomous taxis, all of that. And it's going to start happening there. But I don't know if I trust, I don't know if I trust a robo-taxi in Southeast Asia right now. Like,
I would,
dude,
yeah.
I would not trust a robo-taxi in Southeast Asia, not at all. But it's going to happen at some point. It's going to happen, and Grab will be one of the biggest beneficiaries of it.
What stocks are you looking at right now that are attracting you?
So I am looking.
Also, can you turn up your volume a little bit more? People are still saying
that's so weird. My bad, dude. I don't know why that's happening.
last time you were too loud. This time you're too.
I'm too low.
Yeah.
How about now?
It's better for me.
Okay. Yeah, I'll leave it at that. I don't know why that kept on going down. But some stocks that I'm looking at is Skywater. Skywater Technology. It's one of the smaller cap semiconductor plays. They're US based. So this is like what you and Stock have been talking about in the earnings edge, where you want to focus on companies that are more of the onshoring for the US. Skywater is one of those companies. They basically build the automation workflows for building semiconductors, and specifically in the US. And they have a lot of US backing as well with government subsidiaries. It was trading at $19 just the other week, and this is like very volatile, right? I'm not buying it right now, but I'm like waiting for the market to kind of recover a bit in its bullish trend to kind of get into this one. I might be adding to Zeta. I've already added a good amount to it, so I want to kind of hold off. Amcor, of course, I'd like to add to as well. Amazon, I mean, Amazon's like.
Hold on, let's pause on Amazon, because this is for those that don't know, this is Sam's biggest position. And by the way, I'm putting Sam's Twitter in the chat, so everyone please make sure to
Amazon's our biggest position, not Zeta.
Yeah, well, if Zeta was your biggest position, you'd be getting a text from Davis every day.
Yeah, that's funny.
Why do you think Amazon is not getting any respect?
I don't know. Like it's going red year to date. The company is the largest hyperscaler in the entire world. They're arguably one of the most diverse mega caps in the entire world, right? You have NVIDIA basically focusing on semiconductors. You have Microsoft focusing on software and technology. You have Apple, but like Amazon is one of the most diverse companies out there, and arguably one of the strongest moats out there too, right? Like it's not just software, it's also e-commerce, right? No one, unless a big player comes around, they're not taking business from Amazon. It makes no sense to me why it's trading this cheap, but like, dude, I would think that like if there's a company that is going to be the largest, consistently one of the largest companies in the world, I don't know if they're ever going to stay being the largest company, but consistently one of the largest companies in the world, it's going to be Amazon. They have their hands in everything right now, and they continue to expand. And also they have the space theme, which you can't directly buy Blue Origin right now, but you can do it through Amazon, right? You would, it's like basically not owning part of SpaceX, but like being a part of SpaceX by owning some Tesla, right? Like it's kind of the same with Amazon, Blue Origin, and Zoox and all these other ventures that they have. But also it's a robotics play of the next few decades. Like they're going to be saving a lot of costs on it.
And that robotics play should also inflect their margins. What did you think about the OpenAI deal? Do you like that they're potentially investing?
No, I didn't. I didn't like it at all. I was actually surprised that it was up so much last night, but now we see it fading off. And it's not like I hate this specific deal, but I don't like the ties that people create with OpenAI because the market hates it so much. So in another world, this would be the most bullish investment that they could see. But at a $500 billion plus valuation for OpenAI, you know, and we start to see Gemini get a lot better. We start to see that a lot of people are starting to use these other models and rating them much better than ChatGPT. And ChatGPT is still making most of its money off charging on a monthly basis for its LLMs. I don't know, like, did OpenAI top? Hard to say.
TJ says Amazon has been a turtle. Your at least premiums are decent. That is the cool thing about Amazon. Like, if you're wheeling it, the premiums they're not like BM&R premiums, but they're good premiums, and it's Amazon. So, and because it's so flat, like, it just stays in a range, which is perfect for the covered calls. So that is not too bad. Speaking of OpenAI, let's get your reaction and the chat's reaction to this 1 minute, 30-second video that OpenAI posted today.
OpenAI did not set out with a thesis that compute was the path to progress. It's that we tried everything else, and the thing that worked was compute, was scale. We are absolutely bursting at the seams with demand for compute relative to our ability to supply that compute. When we look at our launch calendar, the single biggest blocker often becomes, okay, but where's the compute going to come from for that? When we had our image generation launch in March that went viral, we did not have enough compute to keep that going. And so we made some very painful decisions to take a bunch of compute from research and move it to our deployment to try to be able to meet the demand. And that was really sacrificing the future for the present. And this is, first of all, a very painful thing because we have so many features, so many products that we want to launch that get held back because we didn't have enough compute. And that what we do not want is to be caught flat-footed, where we say, well, 2 years ago, 3 years ago, we should have been planning for more. We want to be ahead of the curve. And the truth is, I do not think we will be, no matter how ambitious we can dream of being right now. I think that the demand will far exceed whatever we can think of.
Okay, so when you hear the president of OpenAI say that, is that enough to be like, nope, this AI trade has another 10x because there's not enough compute?
Dude, was that an AI generated thing with Sam Altman's voice? I couldn't tell if that was Sam Altman talking or not because it was lagging for me a little bit, but that really seemed like that was a AI generated video of the president of OpenAI with Sam Altman's voice.
It definitely, everything they're doing media-wise is just creeping people out. It's not really inspiring.
I don't know.
But does he have a point? If he's right that, by the way, what he's talking about is the whole Ghibli thing, when that thing went viral and they added so many users. Apparently, he's saying they have to take compute away from research for deployment, which is bad for their future business. It's good for their current business. And if they don't want to make the trade-off, is that why they're signing all these deals? Because they realize if they have that much demand, where they can give Oracle a $300 billion contract on RPO, that should be bullish, right? Unless you don't believe that.
I think from this, at this point, OpenAI is they gave birth to AI as the consumer knows it today, right? Chatbots. That's what, if you ask any consumer out there, the average consumer, they're going to think like ChatGPT is like the first one, right? But in actuality, it's way before that, and it's not ChatGPT. It's everything in general. That's what encompasses AI in general. For OpenAI to basically go down, you would literally talk about the whole market going down because everything is tied in. And I think at this point, Sam Altman is trying to get his hands in everything. So that way, it's like, if I go down, y'all are coming down with me. Like, I don't think he's doing that from a sense of being evil, but I think more of like, if you involve yourself with everyone, then that means that you become more important. Yeah, it is a smart move, right? And Scam Altman, Sam, evil. Like, I don't like to judge people because I don't even know Sam Altman personally, but like, I would think that, look, OpenAI has to expand its valuation, and they have to keep on talking about the crazy demand in order for their market cap to go up, in order for the whole market to go up, and so on, right? Like, they can't say anything but that.
Yeah. No, I agree. TJ, thank you for the super chat. Santa Claus is coming to town. Don't be a little bee. Buy the effing dip.
Dude, I'll buy the dip. I'm just going to wait for the market to recover a little bit.
Yeah, I mean, look, I think the buy the dip philosophy is very simple. If you really believe a name is getting stupidly priced like I do for a company like Grab, I'm buying that dip. So it comes up to an individual decision for everybody. But to your point about Sam Altman, I agree with you. I'm not the biggest fan of the guy, but he has to win. Like OpenAI has to. There's too many contract commitments at this point for that. I think that's why Masa and SoftBank is investing $40 billion in them, because they kind of know it's inevitable that if they don't win, where is this S curve of AI growth going to come from? If it's not at least partly, and in big part because of OpenAI. So you kind of have to close your eyes and trust the guy. But when he answers the way he answers questions on podcasts, and they have all these aggressive spending commitments, it definitely can shake up how the market's thinking of it in the short term.
Yeah. Also, a lot of the media that's centralizing around like looking at Sam Altman's deal, it's like it's like momentum that's building up, and the media sees that it's getting ratings, so they want to talk about some of this stuff more. But in actuality, yeah, if OpenAI goes down, guys, we're all going down. Like, you cannot have OpenAI go down, the whole market not go down. Maybe we decoupled a little bit from it with Gemini coming back, but if I'm rooting for Sundar, mostly because I personally think Gemini is a much better app, but I think that OpenAI is pretty far ahead in the game, that they're able to kind of innovate in things. Like, for some reason, I don't know why Gemini doesn't have the ability to group chats together in certain projects, but I think they could just easily flip that switch one time and have it. And when they do, I will be switching over to Gemini very quickly. But I think that it's good that you have this competition's healthy, right? You need competition in order to improve better. Otherwise, you get basically the iPhones, where they're just not improving at all because they basically have no competition out there.
Nebius, IREN, Cypher. What are you thinking about the data center trade right now?
Man, I already built these positions, IREN, Nebius. So I'm gonna let it roll. I really need to see some sort of balance in this, because every single pop is just getting sold off, which brings me very little confidence that we're bottoming out right now.
Yeah, and you built these positions early too, right? So
yeah,
you can withstand some of the.
I like to do that. If I'm going to add to something, there needs to be like a much longer trajectory there that isn't wholly relying on the market staying in a bull market. Because we could easily not be in a bull market right now. I would like to see things kind of turn around a little bit, so that way I know that I'm not like buying the dip aggressively. DCA is the key term. DCA is completely different from buying the dip, because I feel like if you DCA, you're not so concerned about the timing, you're dollar cost averaging, right? So it doesn't really matter where the stock's trading in a week or in 2 weeks or whatever, because you're just constantly buying all the time. Like Steve DCAs, Matt DCAs, and they've been doing it amazingly for the last few years, right? Matt says he's still buying Rocket Lab. People are like, oh, why are you buying Rocket Lab all the way up? Say, well, the dude was DCAing still when it was $4, right? Like, DCAing is the answer if you don't want to care about the stock price, right? But if you want to be strategic, add large size to positions or buy calls or whatever, then that's when timing matters. And for me, the time is just not right now, not for me.
By the way, your Micron inverse trade might end up going green right here, giving up 50% of the pump so far.
I'll just let it play out. Let's see all those people in the chat kind of bite their tongue if Micron turns red. You can hate me now, but I won't stop now, guys. See that? You see what I did? Did you watch that P. Diddy, that P. Diddy documentary?
No, I got to like 20 minutes of the first episode, but
it's wild.
Steve will be on in 5 minutes. We'll get his thoughts on the market. Let's watch this real quick. This is a minute 40 of Trump. He's going to be making an announcement today, and it looks like it will be about Venezuela.
I mean, devastated, but great people. Great people. So thank you very much for being there. You're doing a great job. It's been going through. You remember they took all of our energy rights. They took all of our oil from not that long ago, and we want it back. But they took it. They illegally took it. Oh, Dan did a great job. Getting land, oil rights, whatever we had, they took it away because we had a president that maybe wasn't watching. But they're not going to do that. We want it back. They took our oil rights. We had a lot of oil there. As you know, they threw our companies out, and we want it back. What's the message receiving?
Okay, so I know it's a little hard to hear, but essentially the 9 p.m. address to the nation tonight is going to be about Venezuela, because that's what the questions we're asking about. I haven't looked into this too much, Sam, but do you know why the hell we're getting involved so deeply with Venezuela?
Well, they want oil, the price of oil to go down so inflation goes down. Venezuela controls a lot of the oil. If they release a lot of the oil out there, it'll push the prices of oil down more.
But oil's down a lot already. It's at 58.
Yeah, they want to lower. They want to lower, so inflation's going to go down. That's their drive. They want to win those midterms.
Okay. So what? He wants oil at like 45, which is not. I don't think that's the healthiest for the oil industry.
Ironically, look at XOM. Green in the day is up like 2.5%. Look at energy, XLE. That's up in the day. I may or may not have calls in XOM right now.
You just have little trades across the whole market.
I have little trades, I scratch a little bit of an itch or whatever, but like,
you are an active trader, bro. You got these little calls.
I do some active trading in the short-term portfolio.
Okay, so Politico says Trump administration asking U.S. oil industry if they would return to Venezuela once Maduro is gone. Okay, I haven't looked this deep into it, but piecing together some of the headlines, it looks like we want to get rid of Maduro to get control of the oil, to, as to your point, reduce oil prices. And tonight at 9 p.m., Trump is going to justify that to the American people by, what, are we declaring war? Are we subtly declaring that we're into, like, is this self-defense? I mean, this is kind of weird. I didn't expect this pivot towards the end of the year. Especially with oil price, it's not like oil prices are at $100 a barrel. Like we're significantly lower than last year. So I guess that's another geopolitical risk that we have to take into
account. And when we finally hit them, that's probably when the market bottoms. Until then, they're trying to sell into the event. This is kind of what we saw with the other wars that happened, right? It would always sell leading into the event, and then the event happening was the bottom. So I'm going to be surprised that it happens over here, but I don't know. I don't know if the market really cares too much about this.
The market always fades the war stuff, the geopolitical stuff. But, I mean, this time, oil is definitely a big part of it. And so that, from an inflation perspective, that's where the Fed might have to seriously care about this deeply, along with the administration. But I agree. I don't know if the market's going to react too much to it, but nonetheless, it could be a headline that could, in the short term, affect the market. Okay, so that's what we got in terms of what's going on with Venezuela. Hoodie, we had a big hood event last night. Truist initiated coverage at 155. What did you think about that event?
God damn, dude. This is like one of the best companies out there. I did a post about it earlier today where it was like they're rapidly expanding in TAMs that are rapidly expanding as well. And they're directly competing with a lot of the sports betting markets that are out there. Not the predictive markets, but sports betting in general. They're going to start building parlays. In fact, I think they already have some combined bets right now with football. But they're reading the room and they're getting ahead of it, right? Like we are nearing the end of the NFL right now, or the season right now, but we're heading toward the Super Bowls and playoffs and everything going on. And like they're improving basically the capability of what you can actually bet on in there. And the NBA season 2, I mean, this is just a phenomenal company to own. And the problem is that it's a high beta tech stock, right? Yeah. So if this thing gets in like, I would say the 70s or 80s, which would be crazy if it did, I would really be buying heavy in hood.
I agree. And that's why I also hedged my hood position today. At the end of the day, I am way too overweight hood, which is essentially overweight one of the highest beta named stocks in the market that is contingent on the market being bullish. So not only
your position grew like 10 times.
Well, 100%. So, and that's part of the reason why I'm like, if I have to let some shares go, I'm letting them go off a very low cost basis. And then number 2, it's like, if I can protect my downside in the way that I did it by selling in the money calls, then I can just sleep better at night. Because look, my downside is 80. If we have a 50% drawdown to 80, which I don't think is going to happen, but again, if the S&P, which was down 1% today, took names down 5 to 7%, I can't imagine if we go down 10%, much less 15%. A lot of these names are falling 30 to 40%. It's inevitable. So I don't think that's the craziest idea. But like you said, the execution of how they are tapping into all these different industries is why you stay long the stock and long the story. It's just the volatility of the stock in the midst of their 20-year execution arc, which I think will get them to $1 trillion, is going to be volatile. And you have to be able to naturally deal with that.
Yeah, they're also expanding to other regions as well. So that's also untapped markets where there's very little competition.
Agreed. Let's bring on someone else who was stuck in meetings all day, which is why he didn't take a day off. I thought he was taking a day off today, but he wasn't able to. Ladies and gentlemen, no reason to fear. The milkman is here. Steve, hello.
Thank God you didn't bring me on about 20 seconds ago.
Wait, why? Did you run over somebody?
Because I got cut off by a cabbie and flipped out.
Wait, the cab driver flipped out? Or you flipped out?
No. They cut me off.
Oh. So I'm assuming you
I
yelled
have
pretty
since
hard.
calmed down.
I should have brought you on, bro. That would have been peak content. That's what the people want. That's what we need. All right. Well,
are you in New York City?
Of course. It's in New York. It's the only place where you get that type of road rage. Steve, I know you've been in meetings all day, but I mean, obviously a little ugly day for the market. Oracle headlines, data center headlines. Your general thoughts on where you think the market's going right now?
I mean, selfishly, I wanted to go lower, but I think we're fine. Remember what I said a week and a half ago. You needed two things to go right. You needed the Fed to cut, and we got the most bullish situation out of the Fed. They didn't just cut. It was very dovish, and economic projections were great. And then we needed Oracle not to expand debt at a rate that exceeded cash from operations by that much of a spread. But they did, causing the AI bears to come out, which freaked out the market. And then Broadcom gave you the icing on the cake when they couldn't give you a full glimpse into AI revenue. And that just absolutely was the nail in the coffin on this. And one company, Oracle, does not dictate the AI trade. And this is short-term sentiment. Oracle should not have been where it was. Broadcom should not have been where it was. Broadcom's actually looking interesting here. And in a couple of weeks, this is going to fade out. I mean, what are we going to do? Put Meta and NVIDIA at 12 times earnings? It's not happening.
That's the other reason I am not like, I mean, I don't know. This decline doesn't seem as scary, quote unquote, decline, because a lot of these stocks have already corrected, especially Meta and NVIDIA, as you mentioned. So if the street really wants to take them to 12 to 15 times earnings, okay. But like, I think someone's going to step in and buy that dip if it happens.
I mean, think about it like this. And I hate using EBITDA as a profitability metric, but since PE uses EBITDA as one of their favorite metrics, Meta's trading at under 17 times EBITDA right now. That is insanely cheap.
Okay,
We're getting to a point where these types of revenue, these types of profitability, the market on the top end is looking inexpensive.
Qualitatively, the blue owl thing with Oracle today and them rejecting their data center. I know you're saying that's an Oracle thing and Oracle shouldn't take down the market, but do you think that has any implications on other data centers potentially not being financed if blue owl rejected this one?
I mean, in the short term, it's certainly not good for smaller companies, because if you have a behemoth like Oracle who has financing problems from one of the largest PE firms, I mean, Blue Owl and Ares Capital are the two big ones. So if one of the big players is going to give Oracle a hard time, that does not send a good message. And this is because of their debt load, and this is because their free cash flow is non-existent, and it is because they have a negative liquidity position of $80 billion or $90 billion. I'm driving, so I can't give you the exact number, but Oracle's numbers look like shit. And this is an Oracle problem. Unfortunately, it's creating a narrative problem, which I said would happen.
But Steve, is it really an Oracle problem if they have 500 billion in RPO? Like, why is the street upset if there's so much money they're going to collect in the next 5 years?
Remember, there's no guarantee that that turns into revenue.
So you're saying the quality of that RPO is severely being discounted by the street right now?
My freaking headset just disconnected for some reason. I don't know why. What I'm saying is,
this actually sounds
the
way
market
better.
has little faith in Oracle right now. What?
This sounds better. Your headset sounded worse.
You said this sounds way better?
It sounds way better, yeah.
Well, unfortunately, I can't hear you.
You can't hear me. That's not good. Okay, you might have to switch back to the headset. AI needs to fix this, bro. If AI can't fix this shit, then what's the point at this point?
Someone said Steve put us on hold to chug milk.
Oh my gosh. Okay, so we'll get him back in a second. But Sam, I'll ask you the question. Do you think the quality of that RPO is being severely doubted?
This isn't, I don't know, RPO. I don't know why these companies start posting RPOs. They're not software companies, right? In software companies, they report RPO, but they also back it up with other data, as in the amount of modules, the percent of modules that companies are investing in, the percent of ARR growth for companies with ARR over $1 million, whatever the amount is. Like, they back it up with data. Oracle's just like, we have $455 billion. Now we have $540 billion. It's like, okay, so give us more details. And they're not providing those details.
Steve, you there?
I am here.
Okay, yeah. So I was saying, same question I just asked Sam. You're thinking the quality of that RPO is being severely discounted by the street for Oracle.
I don't know that anybody knows what the actual quality is, but look, Microsoft's was 392 billion. Somehow Oracle's is over 500. There's no guarantee that all that is going to turn into revenue. And they also never gave a timeline of when the RPO is going to materialize. So I don't know. I think that the Oracle balance sheet and cash flow statement is a problem. And I think funders are looking at this as, is this a risk worth taking? There is a lot different with Meta, because Meta can write a check and eliminate all their debt. And they're doing 44 billion in free cash flow right now. Oracle does negative, what is it? Negative 20 billion, negative 28 billion, something like that. So it's a tale of two cities. Oracle's financials are night and day worse than the hyperscalers.
Okay, so let's say the market is going to take a breather on this AI trade. Do you think, and there's this rotation to financials or healthcare or whatever, do you think that rotation is long lasting, or do you think multiples get cheap enough where the market can't let NVIDIA trade under 20 times if it gets there?
I mean, both can happen. And think about this. A broad market rally should happen because there's a lot of quality companies trading at valuations that are very inexpensive. And they're probably going to experience expanded margins because they're going to utilize AI and utilize robotics, and cost of capital is coming down. So there's a lot of triggers in order for them to expand margins and increase profitability. So I can completely see a broad market rally. And financials usually do better when rates fall because it increases the spread on the NIM.
Agreed. I mean, and that's the other thing. Sam, your thoughts on the Fed easing? Like, that seems to be an intrinsic put on this market that's hard to ignore, which is that rates should be coming down substantially.
Yeah, they're starting QE for the most part. I don't know if it's technically called QE what they're doing, but they're heading toward that easing cycle when it comes to buying bonds off the or adding bonds to their balance sheet or buying bonds off the open market. I think that is. You don't fight the Fed, right? We're cutting rates. We're going to be starting QE soon. You don't fight the Fed. And I don't think that this is 2022 where everything was slowing down, the Fed was hiking rates. This isn't that case at all. Again, the question is timing, right? Like, when is the market to be like, okay, guys, enough with the selling, let's continue buying this up? That's really the biggest question. But I mean, it's arguably, I don't know why, and Tom Lee said it the other day in his interview, I don't know why Walmart and Costco traded a higher P than NVIDIA. It doesn't make sense. Even their gross margins aren't near NVIDIA. NVIDIA is a hardware company, right? And they projected to have gross margins stay around the 70% level. Like, I don't know why that's the case, but the market just disagrees with it sometimes. I don't know, maybe we top at Costco and Walmart for now. Who knows? We'll see. But I mean, financials, I agree with Steve, right? It comes with Nubank as well. If they're able to make more money off of that spread, so basically take the money that people are giving them, which is considered debt for them, and then turn around and loan it for a much higher rate, then that's more money to those banks for their, I forget the name of the term, for their net interest margin, or sorry, net interest income. That's more money for their net interest income, and then expanded net interest margins, which might be one of the reasons why, and maybe not directly applicable to Nubank, but might be the reason why financials are trading near all-time highs today, because the market knows this. They understand that as rates do come down, which they did restart the rate cut cycle recently, or not the rate cut cycle, which they did restart cutting rates recently, and you get Kevin Hassett in there. Oh man, that is like such a dove being thrown into office. Even Waller as well. Waller made commentary this morning that was very dovish, right? And I think the odds of Waller increase and Hassett decrease, hey, those are two doves in the camp that could become the new Fed chair. Like, at some point, this is why I still think we're in a bull market. We're going to reverse. I don't know when that's going to happen or where we're going to be in the market when it does reverse.
Steve, do you think the market needs a full proper flush out? Because we haven't had it since Liberation Day. We had like max 5%. Do you think there needs to be a 10% correction before we go home?
I think there needs to be a flush out on high beta names, not across the board, because a flush out at 10% on some of these great companies is insane. But a lot of these high beta names should have never got to where they were. People piled too much money into them, and people probably went on leverage into them and are probably hurting right now. And I think that there are investment products out there that are utilizing 4 and 5 times leverage that isn't necessarily healthy either. I think that there's a lot of leverage out there, and I get very worried with that stuff. But watching everybody talk about these high beta names and only caring about these high beta names is not good.
Yeah, I think it definitely also makes people, and I'm guilty of this myself, just they need the dopamine immediately of seeing the name and the stock go up and keep going up and all that. And that's just, we know that's not healthy. We know that's not reasonable. And there's money to be made during that time, but
it's not realistic. I mean, everybody's looking for the next Palantir or Robinhood, and it's not realistic to find that. Those are very freak opportunities, and companies like Oklo should never have gone to where they were. And that's why they crashed so hard. And I think they're going to continue going down. There's a lot of companies that got to the levels that they should have never gone to. And that's a problem. Yeah. It's a problem when we stop going off of fundamentals and profitability, and we get into such pure momentum that becomes absolute speculation. It's a problem.
Sam, your thoughts on a flush out of high beta?
Yeah, there is, when Oklo was trading above $150 or around there, and then you had companies like CEG or Constellation Energy Group, or you even have GEV. Well, obviously GEV was still going up higher. GE Vernova and CCJ, Comico Energy, not rising that much in appreciation. But companies that are actually making money off of this stuff, like, that made no sense to me, right? And I would even argue that some of these data center stocks got very ahead of themselves, right? And who knows? We'll see what happens. Like, I would like it to go higher, but like, realistically speaking, we really need a massive sentiment shift to get a lot of these high flyers back to all-time highs. And some of them might have already seen it. And I don't think that some of the data center plays have topped out or anything, but guys, let's be honest. I mean, some of these stocks 10 times in a matter of a few months, it needs to take a breather, and even like a 50% haircut isn't even that big of a deal. It shouldn't really change anything, right? Like what we do want to see are these value stocks continue to broaden out in the market. And if the RSP is sitting near all-time highs, that does not look like to me the bull market's over. It just doesn't.
I think what we want to see is the Max 7 get the money that's stuck in the high beta names that probably don't deserve the capital that's in them. And which is kind of what's been happening with the market. The S&P's been, I know it's down, but it's been relatively stable, even though you've had a lot of Max 7 names go down. And so I think you want to see those names pick up so that Meta's not trading at a 18 times earnings. But also that means Oklo can't trade at like 1,500 times sales. And so far that hasn't happened. We haven't really seen a rotation like that because every time the market pumps up, those high beta names just come back up. And I think that's what confuses. And it's not a proper flush out, which is why I'm asking, do we need to have a full-on correction to get all of it flushed out? But I agree with you, Steve. 10, 15% down on Meta or NVIDIA, it would not make sense at these levels at all.
Oh, look, there's also other things that go into it. You have more people watching a screen all day long. You have more people trading. You have more volume and you have more liquidity than ever. So things are going to move purely based on momentum and speculation more than they have in the past. And I don't think we ever get away from that. The thing that I get a little annoyed at and worried about is that we are completely disregarding fundamentals and financial analysis when we're saying that a company like Costco should trade at 44 times 2027 earnings when NVIDIA does Costco's entire annual profits, entire annual net income in 4 weeks. Yet it trades at a valuation that is cheaper than Costco. It doesn't make any sense whatsoever. And the argument of stability is not a good argument because, in case people haven't looked, Costco's got a 2.97% profit margin. And in a recession or in an inflationary environment, they are likely to get squeezed just as much as everybody else. And they have real competitors. Walmart's e-commerce system is a competitor to them. Amazon is a competitor to them. Sam's Club is a competitor. And we're allowing companies that have minimal growth to trade at valuations that don't make sense. While you have the leaders of the next economy, Microsoft, Meta, Alphabet, Amazon, trading at 26 times and less forward. So I think that we need a rebalancing. And people may think that's crazy because of how much big tech makes up the S&P. But you have to look at profitability and you have to look at actual fundamentals and how much these companies are growing their profits. It's
By the
just
way,
weird that we are in this situation.
DoorDash partnering with ChatGPT. That announcement after hours, DoorDash up 2%. Looks like you'll be able to order food from ChatGPT now. Steve, I don't know how much you've read up on this Venezuela stuff. Trump's making an announcement tonight at 9 p.m. You have any thoughts on how that could affect the markets?
No, I think it's going to matter for oil. That's about it.
Yeah, and Sam was saying that oil prices need to stay low, and the administration might want to keep them low.
I don't want oil below 55. I can tell you that right now, and we're teetering on that.
I want
oil to. I know we're teetering. I want oil between 55 and 65 because everybody makes money then. Upstream producers make money. Input prices are very low. Manufacturing companies increase their spread because their raw material prices go down. It is a much better situation than oil at 80 because the economy will just work well in that band of 55 to 65. You get into a situation where oil keeps going down and you get oil under 50, you're going to see less oil on the market, and then you may end up overshooting it and at some point get supply constraints and watch oil reverse sharply to the upside. And that's what we don't want.
I also think we don't want a war with Venezuela.
Why?
Yeah, so it's, I think this announcement.
You think that anybody's worried about war with Venezuela?
Oh, you said why? I thought you said right. Well, the way Trump's talking is acting as if it is a war.
I
Just-
doubt that Trump is going to put us into a war, and I don't think Venezuela is going to try to go to war with us. I think their announcement's going to be something else.
You think it's not going to be about Venezuela at all?
No, I'm not saying that. I just don't think that we're going to end up in a war with them.
Oh, yeah, I don't think
with them does
I don't think
nothing.
I don't think he's declaring war tonight. I don't think he's asking for congressional approval. I just think it's creating some foundations for people to perceive it as a conflict, to say the least, if not a war. I don't know. I don't know if that could be a geopolitical thing we have to keep in mind for 2026. All right.
Amit, guess what company is in my stock draft portfolio, even though I'm losing?
Did you see the numbers at all or no?
I took a look at before I left.
Okay, so give me your thoughts. Steve is up 85% on Micron, best one in the draft. What do you think about those earnings?
It's a no-brainer with the amount of data centers going up that you need way more RAM. Plus, you had a Windows 11 upgrade cycle where Windows 10 got sunset in October, and you had companies and individuals scrambling to buy new laptops and desktops because all security patches were ending. That was probably the easiest trade.
Yeah, dude, they increased operating margins for next quarter by like 20%, and they increased guidance by 100%.
Oh, when NVIDIA said that they're going to do $65 billion in revenue, you need DRAM in all of those servers. You need RAM in all the security products.
Go ahead, Sam.
Micron was a no-brainer trade when it was in the low hundreds and double digits. Micron was a no-brainer trade then, especially with its reliance on the bill of materials for building semiconductors. Micron here is not a no-brainer.
I mean, but that guidance
the guide was great. I'm just saying that Micron, it's not as much of a no-brainer. It definitely has upside in the AI trade in the future if we continue to go up. I'm just saying that the easy money has been made in Micron. It could still go higher. It can.
Yeah,
I'm just, it's that asymmetric play is, I mean, I don't know.
And when I say was is past tense. Like, I agree with Sam on that. It was a no-brainer. The easy money has been made. I wouldn't be going into Micron now trying to chase it, but previously that was a no-brainer, giving everything that we saw on every conference call throughout the year and all the CapEx spend. You need DRAM for servers, and you need it for security products, and you need it for computers. And you had a perfect storm with the Windows 10 sunsetting.
Okay, so let's end this off with talking about the end of the year. Sam, you said 7,500. Do you think we
way off?
Do you think we at least 7,000?
I don't know anymore. I don't know. We're trading below all the moving averages and indices. I mean, we can, right? Like Santa Claus rally historically happens after Christmas, so it can easily come back. I think, I don't know. I didn't watch the Technical Tuesday yesterday with Jason, but he was also saying like Santa Claus rally is going to start on the 26th if it happens, right? So until then, maybe wait it out a little bit. Do I still think we're at 7,500? No way. I was looking at the odds on Robinhood today. It was saying that there's like a 44% chance we're going to end around 68 to 7,000. And then the odds of ending around 66 to 6,800 are actually going up. Of course, that's going to move with the market. But I don't know. I mean, we'll see. I think there's been quite a good amount of selling that happened lately, where in order to go down further, you just need to have sentiment just get even worse. I think sentiment is pretty bad right now, in my opinion. I don't think it's terrible. Not as bad as mid-November, but I think it's pretty bad right now.
Steve, you think we get 7,000 end of year?
I think it's a possibility. I mean, let's see where the bleeding stops. I think that there's cash ready to be deployed. And keep in mind, if this is tax loss harvesting, which I have a theory that you'll really see tax loss harvesting in January, because why would you want to sell now just to pay the bill in a couple of months? At least selling in January, you have 14, 15 months before that capital is actually due. So I think you actually see tax loss harvesting more in January, unless you've taken profits already and you need to offset it. And that's something people don't necessarily think about. Because you can put that capital to use for another 14 months or so, selling in January. So you get a free loan basically from the government on that. Now, end of year, I think we could get to 7,000, but that's if enough people with cash decide to come in, and if capital from the sidelines comes back in, because there's now an opportunity to buy equities. So we'll see. I wouldn't be surprised if it's 6,800 to 7,000. I don't think there's anything materially to take the market down to 64 or 6,300, because we did get a rate cut. And the best part is you got earnings coming up in 4 weeks. I mean, Tesla's reporting in 4 weeks from now, roughly. And then you roll right into big tech. So we can stomach this for another couple of weeks and then go right back into all the good news and companies putting up record earnings again. Because if you think that the story is over for Alphabet or NVIDIA or Meta, I think that people would be mistaken on that one.
We also have CPI tomorrow, so that's going to be really important to make sure that inflation is not gapping up like crazy. I was going to ask you guys about Tesla as well. I mean, I don't know if it's topped out again for the second year in a row, but it's kind of crazy that last year, December 17, 2024, 488.54, this year, 495. Do you think Tesla deserves to get anywhere near 500? We'll start off with you, Steve. And do you think it could get hit pretty badly back to the 400s if we see a big meltdown?
So real quick, the other thing that I forgot to say is unemployment went up again to 4.6. And that's also probably freaking the market out a little bit. Even though, now the good thing is we got good economic numbers out of the Fed. But unemployment up to 4.6% is the highest level we've seen in several years. So you're also getting a real narrative framing around people out of work. So I think everybody needs to keep that in mind also. As far as Tesla, Tesla's grossly overvalued. You know my position on that. It is being held up by optimism from Optimus and FSD, which is not generating any material earnings or revenue right now. And right now, those are stories. We need to see when they actually materialize. But it is the most expensive in the Mag 7. And if you look at it on a forward basis, NVIDIA trading at 19 times 2027 earnings versus Tesla trading, I don't even know where the numbers. I think it's like 120 times or something like that. A little insane. Especially NVIDIA's got more EPS growth than Tesla over the same time period.
So why do you think it even got close to 495? Like, why did it get to
Tesla never trades off the rules. It's a pure momentum and sentiment trade. And everybody thinks it's going to be a 10 or $20 trillion company in 10 years from now. So they're willing to put money into it now. And if there's more buyers than sellers, it's pretty hard for stock to go down. And it keeps finding new buyers. But on an actual numbers basis, it is one of the most overvalued stocks in the market.
Sam, your thoughts on Tesla?
I mean, it's a momentum trade. It's been a clear momentum trade for a long time. Like when it moves down, it keeps going down. When it moves up, it generally moves in that direction. Today's candle probably was not the best candle you want to see in the daily, but I'd imagine if we reverse, then this thing's going to be at new all-time highs again.
Yeah.
It really is like a sentiment and momentum trade. It is completely decoupled from its financials. It is where it is right now, and let's just say they start to re-ramp revenue, they start making money in Optimus, EVs start coming back, and whatever it is, like the stock's gonna be $1,000 by then. Like it's not gonna be like, okay, we're seeing the good revenue now we're gonna go back. It's like, no, they're gonna front run that way ahead of time. It's just gonna be like one of those companies where you either buy and just forget about it for the rest of your life, or you trade it.
Yeah, I think it's fair. This thing is going to run massively if people start to even see a hint of the physical embodiment of AI that Tesla's been talking about for a while. But if the market sentiment gets hit, Tesla's high beta, that one gets hit as well. So you got to have the stomach for a lot of these names. And that might be the theme of 2026. So let's end it off on this question, Steve. Sentiment today going into 2026, I would imagine don't fight the Fed, AI trade still intact, therefore relatively strong year for 2026 you're expecting.
Strong year. I mean, especially with a changing of a Fed chair, and we know we're going to get a dove in. You have good economic projections, and the biggest companies are expanding earnings. So as long as unemployment doesn't keep going up, there's not a lot to worry about next year, unless you have a black swan event or war breaks out that we can't handicap for. But the reality is that earnings are going up.
Sam, 2026, bullish, bearish?
Yeah, I mean, the projections for earnings growth is continuing to expand. Probably going to be double digits next year again, or at least maybe not in the first quarter, maybe in the second, third, or fourth quarter. And I don't think that it's over at all. Get a little bit of a shake off, whatever it is, things start to look good. The market's going to be singing a complete different tune. Things are going to start running again. And when that happens, then that'll be a great time. Until then, buy the companies that you really like, buy the companies you did your research on.
All right. I would tend to agree. By the way, Coinbase officially launching stock trading and prediction markets. So we kind of knew they were going to do that. That is officially live. And so continues to bolster the broader bull case around Coinbase becoming a bigger financial app as they're now launching tokenized equities as well. Jim, thank you for the 15 memberships. Appreciate it. 15 of you guys got some memberships courtesy of Jim. Thank you for being here. Thank you for being in the chat. I will link Sam's Twitter and Steve's Twitter and YouTube as well in the chat. That's pretty much what we got for today. I mean, a continuation from those Friday lows because of the OpenAI Oracle news. Again, something to do with Oracle today. And I guess we're just going to have to see how the market interprets it over the coming weeks. All right. Steve, any last words?
No, let's just see what happens. I mean, I just don't think that this is going to be a long-term continuation. Everything seems to get over-exaggerated to both the up and the downside. We got a bunch of bleeding and a bunch of names. And at the end of the day, the market's still up quite a bit. Now, if you were buying at highs, you're hurting. But if you've been long-term invested, you're probably doing well. And I, once again, don't know anybody that's selling their retirement accounts off because of this. And a lot of people got to reinvest on Monday at better prices than they would have the previous week. So it all evens out in the end.
Agreed. It all evens out at the end. I'm linking Sam's YouTube right here in the chat as well. You can check him out. Sam's live every day, I believe at 2 p.m. for the Sam Solid Report.
Oh, it's the Wolf Financial one. No, I'm laughing because someone said I'm going to start a GoFundMe. I should start a GoFundMe right now.
Yeah, that $300 loss that Sam's taken on this Micron trade.
Yeah, I'm getting decimated on it right now. This thing is up 8% after.
Wait, really? 8%? Oh, she's moving.
Yeah.
Okay, earnings call is going good then. There you go. All right, congrats. If you're in Micron, the stock should be up probably a lot more, but given the carnage we saw today, the fact that it's up 8% is phenomenal. So amazing earnings, and that one continues to be green. All right, thank you, everybody. Appreciate it. I'll be live again tomorrow for the market open, and we will see you then. Thank you, everybody. Have a good one. Bye-bye.